We will all be speaking Japanese in a few years. And I don't mean literally speaking Japanese, but we're going to be we're going the way of the Japanese economic model. There's no other way around that. We're following the Japan model, and it's interesting. I'm not saying it's good or bad, it's just as interesting. So when I was reading my man Ed Chancellor's book, The Value of Time, I came across an article right here. Japanese stocks and the BOJ, the Bank of Japan, a study in distortion. All right. The BOJ's latest chapter in unconventional monetary policy is making the equity market a strange place. And this is Dateline 2016. I'm telling you, this is, no one knows how this is going to end. I find these people that say they know for sure that Peter Schiff. No one knows. No one knows how this is going to end, and I just or if even will end. I don't know. You don't know. It's just interesting to behold. I'm always like, what do I do to protect myself, protect my assets? What what do I guess thoughts, but it's interesting. All right. So anyway, from July 29th, when the Bank of Japan said it would nearly double its annual purchases of exchange-traded funds to basically back this 2016 from 32 billion worth is yen to 64 billion worth. Brokers in Tokyo have been selling stocks with a simple, unsettling message. In an equity market where the central bank is the biggest whale and where the government in various forms has become the biggest shareholder in a quarter of first section Tokyo stocks, it's time to buy the fun lows and not the fundamentals. I'm going to show you this here. Check this out. This is 2016, so there's Adventest. Bank of Japan owns 21% in August 2017 of Adventest. Fast retail, all this stuff, crazy. The Bank of Japan's program, which strikes many investors as a signal of the deepening desperation of their leaders, essentially, government leaders, is designed to boost stocks, stimulate growth, and encourage individuals to invest in their own market. So the question is, did it boost stocks? Now, this is in 2017. All right, so this is in 2020. Equity purchases by the Bank of Japan reached a new milestone. The Bank of Japan now owns $430 billion of domestic equities, making the country's largest owner of shares. $434 billion. There's their gains and there's their principal cost basis. To date, the Bank of Japan is the only central bank that purchases equities. I'm telling you. They began doing it in 2010 with the intent of boosting economic growth. We're going to come down here, and there's the economic growth. 2010, They averaged 1.28. South Korea almost tripled that, and the U.S. beat it by 100 basis points. But let me show you something else here. Why did the Bank of Japan start doing that in 2010? Anyone want to take a guess? Because we're going to look at Dan Coolbert's spreadsheet here. You can get a 55e.co from 1990 to 2012. 11 right there. From 1990. So let's start in 1990, the Bank of Japan. We're going to start in 1990. We're going to put $100,000 in Bank of Japan, Nikkei, excuse me. All right, there we go. And we're not taking any money out. 100,000 schmackaroonies was worth in 2000, at the end of 2011, $21,000. The Bank of Japan started purchasing at the end of 2010, and all of a sudden, out of nowhere, we see some massive growth. So let's go to 2012 till today, shall we? And see what's done. 2012. Finnegan, Loudmouth McGee. That's 2014. Oh, here we go. 2000. Yeah, sweet. So we're still waiting on 2022, but the 100,000 since 2012 to today is worth $340,000. It's tripled in those what's that? Freaking 8 years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. Give it 10 years. I mean, that's what a 15. Oh my God, dude. So let's take a look what that rate of return is. 100,000 schmackaroonies, our present value. Our future value is what, 340? Oops. 340 We got 10 years end. That's 15% rate of return. Right? Hold on a second. Let's pause this real quick. The 13% rate of return. Funded off the back, a lot of it off the back of the BOJ buying up the shares. This is, this is 434 billion in 2020. Now we're in 2023. And it didn't do anything for growth? No. But what did they want to do? They wanted to stimulate growth. It didn't do that. And they wanted to boost stocks. Well, it definitely boosted stocks and encourage individuals to invest in their market as opposed to just hoarding money in the banks, what they thought. So check this out, though. It dropped the pond. While the 434 billion in equities is by no means a small amount, it pales in the comparison of total assets the BOJ owns. That includes 5.1 trillion in Japanese government debt. So what happened to the prices of the bonds? The price of the bonds went through the roof. The yields went down. So let's take a look at what the yields are in Japan right now. Japanese economy stagnated quarter over quarter in the first 3 months this December compared to the 0.2% growth and 0.3% contraction the previous periods. Look at this. Look at that growth. It's really growing. Contraction, growth, contraction. And so over the last 10 years, what is the, look at that. It's nothing. Hasn't done anything. So let's take a look at what the yields are doing. Bank of Japan maintained its key short-term interest rate at 0.1%, and that of the 10-year bonds around 0% in April by unanimous vote. Look at these interest rates. Negative. So you got no growth, you got no, let's take a look at their inflation rate. Now obviously we have an anomaly this last year or so, but still let's take a look at prices. Let's be their inflation rate. Yeah. They call it, we're looking at rent inflation. I don't know if that's what we want. Rent inflation. Consumer price. Let's do 10 years. Yeah, that's not what I'm looking for. Inflation, deflation, 0. They got all the way up to 3% here, almost 4% here in 2014. Oops. Hovering between 0 and 2%, deflation. Oops. And now it's coming back down again. Hasn't improved growth. Also done inflated the bubbles of bonds and stocks. And look at so check this out. But the debt to GDP. And there's the debt to GDP. Almost we're preaching 300% now, debt to GDP. It's been above 200% for, a long time. Let's go back 200 years. Right there in 2011, 2010 hit over 200%. Now we're almost 300% debt to GDP. I think China's got a high debt to GDP too, if memory serves. So check this out. Showing only 76% here. I just read someplace that they're, and I said, I remember, I just read someplace that said as well as like right at Japan's debt to GDP. I can't remember where I was reading that from. But anyway, here we are, 129. Anyway, the point being is, what did Japan do? Well, it made a bunch of fat cats wealthy, and everyone else is poor off because the wages aren't growing much, not much inflation, not any growth. But people get by. You know what I'm saying? But the fat cats got by big time. We're going to follow them all. You know why? Because why do you think our yields are so low? Because our government debt is so high, dude. Who's buying the government debt? We are. Our own government's buying our own debt. It's crazy. And when they're the big source of the buying side, what does that do to the prices? It makes it go up. It makes the yields go down. All right. So Japan's the same thing. They're the biggest source of the buying side that makes their prices go up and yields go down. They're not going to, we're selling some of our bonds for the first time in a long, long time here this quarter. That's great. All right. That's like freaking throwing a pebble in a freaking ocean. No one knows what, it's no big deal. Man, we'll take it. But what happens when they take off the brake or they take off the gas? What would happen then? Would there be a massive decline in share prices, bonds and stocks? I don't know. You don't know. But you think anyone in charge wants to see that under their watch? Yeah, we got to go back to normal. Let's stop buying these stocks and bonds. Now, we don't buy stocks. Our Federal Reserve doesn't yet. It's only a matter of time, dudes. And all these idiots, we got to invest Social Security in private companies. Like, oh my goodness, you don't know what you're talking about. That's a dumb move. You want the government as the biggest shareholder of your company's stocks? They basically are now with the regulation, but we don't want them explicitly. That's fascist, dude. Anyways, we're all going to be speaking Japanese because the facts are the Japanese cannot let the modern market work. If they did, they'd see a huge pullback in shares and prices and bonds, high yields, low stock price. It'd be depression. And at some point, I don't even know. I'd like to say at some point it's got to happen. I don't know that to be true. Maybe the modern monetary theorists are right. You just keep. I have no clue. You don't know it. No one knows. Japan is still a thriving economy, guys. I mean, it's not growing anything, but I mean, in terms of what we'd hope, but it's still got people laboring, still got people paying taxes, still got people producing stuff. It just isn't what we'd hoped it would be with a growing economy. It's just not. And then you got a demographic collapse. Same thing with China. Same thing in the United States. It's just not growing. But anyway, we're going to all do this because there's no one on the Federal Reserve Board or the president or anything who says, yeah, take your foot off the gas, stop buying U.S. bonds and stop. At some point, when we have a major market crash, because don't forget, the reason we had the Japanese BOJ got involved to begin with is right here. The stocks in the Nikkei from 1990 to 2012, I was wondering, I said, why did the market just take off? It's weird, man. And now we know because the government said we're going to do whatever we can to prop up the stock market. Look at that. $100,000 is worth at the end of 2012. Well, 2011 was worth $21,000, and the BOJ got involved right here for the first time, 2010, 11, and then they've been adding to it. Even 2020. Well, I guess we all were up 2020. Look at that, man. And what's this right here? This is the returns on the short-term debt. I mean, it's nothing. Crazy. So you think they're not going to do the same thing here? Which could give you some pause. Say, yeah, maybe the downside risk isn't going to be as bad as I thought because the federal government step in if we get a massive decline in the stock market like what happened in Japan. I don't have the answer. No one's got the answer. Everyone says it's doomed. No one knows that. We just don't know. But we're going to follow the Japanese model because no one wants to be in charge when the freaking markets fall and they didn't do anything. We don't have another silent cow. There's not another Calvin Coolidge coming around the pike said, just let the economy work itself out. It's going to be painful for 2 years, but after that, we'll be good to go. Love your thoughts. We'll see you.